This is a great and simple basic question that we all should know, and we should be able to do this in our sleep. All this question asks us to do is to prepare a trial balance, and we should know that. This question is from the textbook, which I think not every single, but most of the accounting students in the world would know about. It's called Intermediate Accounting, and this one is from the 17th edition. It's written by Kaizo, Lakeland, and I forgot the third guy's name. I'll check it out and I'll reference them, of course. So this is from that book, and what this question does is this question has given you a list of normal balances. See how it says the accounts all have normal balances. Now I might ask you, where do we get these balances from? If you remember, in the accounting process, in a very simple way, it goes this way. A transaction occurs, we record it using the double entry system, which has a debit and a credit. After recording it, we post them to T accounts or ledgers. Then we balance those T accounts or ledgers at the end of the month or the year, whichever it is. And then those balances are then listed in an appropriate side, either debit or credit. So when it says the accounts all have normal balances, which I've underlined in green, we got these balances from T accounts. And yes, you should know that. And if you don't, well, now you do. Let's look at these lists. As you can see, we have a missing item over here. Right over here, sales is something that they want us to find, which is great. We can do that. When we prepare the trial balance, as you can see, it's an empty figure. And the question tells us to determine the sales for the year and prepare the trial balance. So what we're going to do is we're going to look at these balances and just say what they are. And what I mean by what they are they an asset, liability, equity, revenue, or expense? And based on that, we can decide if they have a debit balance or a credit balance. If you don't recall, or if you can't remember, or let's say you're sleeping through your accounting class, which happens, you might just be sleeping through this video, which would make no sense, because you could pause it, you could fast forward it, you could slow it down, whatever it is. For assets and expenses, they always have, again, we're talking about normal balances, as the question says, they have a debit balance. For liabilities, equity, and revenue, the balance will be credit. So all I'm going to do is mention what the item is. I'm not going to go into detail if it's a current asset or non-current asset or intangible asset, all that stuff. No, we don't care about that. We're just going to say if it's an asset, liability, expense, all that stuff. So let's take a look at cash. We know all that we all know what that is. That's an asset, hence a debit balance. Buildings, an asset, hence a debit balance. Let's skip some and let's look for assets. Notes payable, nope. Salary expense, it's telling you it's an expense, so do not be too smart about it and leave it as it is. We have inventory, yes, it's an asset. Accounts payable, common stock, accounts receivable, definitely an asset. Notes receivable, definitely an asset. Any word or any term that ends with the word receivable, don't even think about it. It is an asset. End of story. So it's going to have a debit balance if it has a normal balance. Keep that in mind. Both bonds payable, rent expense, and land is an asset. Cost of goods sold, tax expense, tax payable. So these are our assets. Next thing, let's deal with our expenses. And for that, they usually tell you that it's an expense. How How could they do that? Look here, salary expense. It told you it is an expense. Hence, a debit balance. Accounts payable, common stock, rent expense, another one, which says it is an expense. Cost of goods sold. Now this one is a bit tricky because it doesn't tell you it is an expense, but for now I want you to know that it is an expense. Why is it an expense? We'll talk more about that in the future videos. Tax expense, it tells you it is an expense. Don't even doubt yourself, just go for it. So we're done with expenses. Let's take a look at liabilities. Let's look for those. Any term that ends with the word payable, it is a liability. Don't stress your brain cells. Don't even think about it. You'll need them for other things, your brain cells, that is. So call it a liability. And liabilities, as we mentioned up there at the top, they have a credit balance. Accounts payable. It says it's payable. Liability. What else do we have? Bonds payable. Liability. Tax payable. Liability. If you notice something, all these words, right at the end, it had the word payable. Hence, liabilities. Just go for the kill. That leaves us with common stock. And common stock, this is equity, and as we know, equity has a credit balance. Sales, that's the last one. We also have to find the missing amount, which should be fun, no big deal. That sales is also known, usually companies either can call it revenue or sales revenue together, whatever. It's called revenue, and of course it has a credit balance. You know how expenses always have a debit balance? Again, we're talking about normal situations. Expenses have debit balance, sales are always credit. Alright. So these are the list of our, this was the list given to us, we just classified them, and now what we're going to do next in Excel is going to list them in a table so that it looks more neat, and somehow it looks more like a trial balance. This is the trial balance in Excel. As you can see, the first thing will be the name of the company. The second line shows what the item is. It is a trial balance, so we call it that. The third one, if you thought I was okay, you are wrong. A trial balance, for that we don't say for the year ended. We say as at, or you know what, here let's just mention just the date and move on. We can talk more about that later. December 31st, 2020. And oh my god, let's not even talk about what kind of a year it has been. Then we have our accounts and debit and credit. We already decided what was what. We've just listed them. As you can see, these are all assets. So when we make a trial balance, we go in order. Assets, liabilities, equity, revenue, and expenses. These are assets. These are liabilities. This one is an equity. Sales is the one which is the missing amount, of course. And these are all expenses. Let's total up the debit side because we can. Nothing is missing on the debit side, so we can easily total it up. If I can just control my mouse, which would be amazing. Okay, that is weird. I'll just use it this way. Let's total it up, and we get 694,000. This is a trial balance. Even if you have missing items on the other side, which is the credit side, we know that for a trial balance to function, and we know basically that the total on both debits and the credit sides should match. So 694,000, exact same total. Now when I copy that, as I've used the formula, it's not going to work. So the total should be 694,000, but it's not. When we add all these items, except of course the yellow one, because we have none over there, we get 423,000. So when we want sales, we'll put in 694, which is the total, minus 423,000, and that gives us sales of 271,000. And you can double check. check all the items, total them up, and you'll see that total for them is 694,000. And this balances our trial balance. On the debit side, we've got 694. On the credit side, we have got 694 too. As well, 694,000 as well. So that's all good. This is the book, of course, that I was talking about, 17th edition, Intermediate Accounting. We all know it, we dread it, we try to run away from it, but we just can't, so we might as well just face our fears and deal with it. And these are the three authors. I couldn't remember the last names. We've got Kaiser, Wigan, and Warfield.